What has changed with all that's going on in international relations? How does that correlate into the correlations?
To me, the headline is that there are a lot of developments in play, but none of them are really that major, meaning even the oil price surprise is not that much of a surprise or shock in the context of an oil market where production is very diversified. And I think even though some of the data have been inconsistent, most of them are moving in the right direction. So there are a lot of headlines that seem alarming at first blush, and when you dig a bit deeper, to me, none of these are big derailers for the move up in risky markets this year.
What did big conservative money do? I mean, did they proverbially go to cash if they stayed calm? I mean, what is JPMorgan observing from your large institutional clients?
Well, what we're observing is there hasn't really been hardly any participation in the move up in risky markets by hedge funds over the past several months. This has been something I think mainly driven by real money investors, longer term investors. Some people would see that as a reason why there could be broader participation by hedge funds. I'm not sure, but I just think it sort of confirms that the longer term investors are focused on a business cycle that's going to go on for a long time, a monetary policy environment that's going to be very accommodative for a while, a fixed income universe that doesn't look attractive on a yield basis. These are forces that are very hard to push back against with a handful of headlines around geopolitics.
When you look at 2020, is there somewhere that you think was unloved in the past that actually will be more of the focus for investors?
I think there are a handful of markets that weren't loved as much. I mean, nothing was totally unloved last year in the sense that every market went up. So it's not as if there are that many orphans kind of lying around. But I think in terms of some of the relatively poor performers last year, they were EM assets, which should do better in this Fed environment and in this growth environment. I think there are value stocks in the equity markets, which tend to get a lift from some upturn in the global economy. And I think commodities were fairly unloved last year, also because of the downturn in growth, and that's getting a bit of a lift from geopolitics, but also some China stimulus.
Are you expecting U.S.-China trade war to be over, not to escalate, or actually could we go back to the usual tit for tat, one step forward, two step backwards?
What I think is probably the main wild card in U.S.-China over the next 9 months is simply that the situation in Hong Kong triggers some sort of sanction action by the U.S. Congress. So it's not so much about Trump pivoting back to a more aggressive strategy. I think he's made his mind up that that's bad for his re-election prospects. It's simply recognizing that this dynamic now has a third actor, which is Congress, which is minded to look at Hong Kong as a reason to take actions on China. So it's not something that I think you can put any kind of defined probability around, but it's a situation to watch.
I feel like I ask you every time, but because it's the beginning of the year, sorry, Tom, let me just jump in with one quick question
please.
on bubbles.
Please. Mm-hmm.
Are there any bubbles that will burst in 2020?
Not yet. I think you have expensive markets across the board, whether you're looking at fixed income, credit, equities. The markets that are not expensive is the EM complex, but that's smaller relative to the other stuff that I mentioned. They're expensive. They're always vulnerable to a shock, but I think we're far away from bubble territory, either in terms of valuations or positions.